Hi, everyone. Today we're going to go over financial literacy and what that means in retail business. So before I jump in, this is Joe Dubois here with the Retailer's Tool Belt. And again, we're just going to go over financial literacy. And this is a very important lesson because any retailer, no matter what role you're in, you cannot become fully successful unless you have an understanding of the finances of your business. So with that, we're gonna jump right in. So financial literacy overview. There's going to be a number of key points that we're going to talk about today. Introduction, to what financial literacy actually means in retail, and I'm sure everybody knows at this point that retail is not easy, but in order to be successful, truly successful in retail, you have to intimately know your numbers. And that's where a lot of retailers fail, is because they're either afraid of the numbers, they don't understand the numbers, nobody explained the numbers to them. And that's what I'm here for, is to help you gain a basic understanding of your business's finances. The next thing, accounting is the language of business. And I heard this years ago. If accounting truly is the language of business, and I believe that, and that quote came from Warren Buffett, one of the greatest investors of our time. If accounting truly is the language of business, then again, in order to be successful, we need to understand that language. And part of that language moves on to the next point, is every business has the three most popular financial reports, and we're gonna dig into each one of those, so that you become familiar with them and you know what to expect that you should be receiving on a monthly basis. And then a large portion of today's lesson, it does have to deal with different accounting terms, and this is where I think a lot of people get confused and scared, because they see there's so many different types of terminology used in the world of accounting, and not all of it is applicable to retail businesses. So I basically pulled out the ones that are really important for you to know, and then you can build on them. But again, this is the basic of financial literacy. What does financial literacy mean in retail? And there's a few things that I think everybody really needs to understand. That, like myself, I got into retail because I really had a passion for what I was selling at that time, and that was bicycles. And I just loved being around them. I loved fixing them. I loved selling them. I loved riding them. I was great at my craft. But like Michael Gerber speaks of in his book, The E-Myth Revisited, which I highly encourage everyone to read, a lot of people get into retail business because they're good at a skill. They're a technician, as he calls them, but that doesn't mean that they have the skill set to run a business. And I found myself exactly in that spot, and it was very tough for me for a period of time. So when you look at that, and you are getting into retail because you have a passion for it, you need to realize that there is a void in there, and that void is, yes, you have the skill set and the passion, but you don't have the understanding to run a successful business, and what goes into that. So we're gonna hopefully build a foundation, so that again you have a good understanding of your finances, and then we can move on from there. So when you think about the average salary of a business owner, and this is the facts that are currently out there, is the average business owner, and this includes the solopreneurs out there, people that are just basically an owner operator, no employees. The average salary is $45,000 a year. And when you look at what the average salary is for the average employee in the country, which is also right around $45,000 per year, you can start to see that the numbers don't make sense. And what I mean by that is, if you're going to be taking all this risk as a business owner, you're signing your name on the lease, you're liable for tens and hundreds, and if not millions of dollars worth of inventory and payables. And you have to deal with the lawsuits and working 7 days a week, and the 3 o'clock in the morning alarm calls because your store's alarm got tripped. If you're dealing with all that stuff and the average salary is the same as the average employee in the company, it doesn't make sense. And in order to get beyond that, because I'd be willing to bet everybody who started a retail business had grander visions, had dreams, and they want to see those dreams come true. But unfortunately, the reality in this day and age is most retail business owners own a job, and that's it. So we're going to dig into understanding the financials so that you don't just own a job, you can see your dreams come through, and you can actually make something of your company. So I mentioned this before, accounting is the language of business, and that was a quote from Warren Buffett. And he's definitely hands down probably the greatest investor of today. And a lot of people may overlook Warren for um, for knowledge. But the interesting connection that I made years ago was the reason why Warren Buffett is so successful, is such a successful investor, is because he really digs into the financials of the companies that he invests in, and he looks for key things, and he wants to make sure that he's going to put his money in with companies that have a long-term sustainable growth plan. And there's things that he looks for, and that's where if you can make that connection and say, all right, well, what is Warren looking for in these companies, and then you yourself have those in your company, you can basically work on those areas of your business so that your business also can become a sustainable long-term growth plan, good profits. So there's some definite lessons you can learn from Warren Buffett. um, so the other thing I wanted to go into was, modeling the success of others. And this is also something that I made this connection years ago where I found myself listening to CNBC and listening to the different Wall Street reports. And I started to hear a pattern. And it was always coming down to how companies, their stock prices either go up or down. And I was able to model some of my behavior in my company after what Wall Street looks for in publicly traded companies. So that is a great observation. And I know for me, one of my businesses has multiple locations, and Wall Street always looks at same store sale growth. And that was something that it took me a long time to realize, because my company was growing at a 20, 30, 40% rate on an annual basis. But I was looking at gross revenue and saying, oh, well, if I added another store this year, well, obviously my gross revenue is going to increase. The problem was I wasn't looking at same store sale growth. And while my overall revenue was growing, some of my existing stores were either flat or going backwards instead of going forward. So very interesting fact that metric that I looked at, I was able to extract from modeling the success of others and looking at what Wall Street earnings, what they look for. Um, Business is a sport. And I heard this years ago. I know Mark Cuban, billionaire, investor, he even says this, unlike a traditional sport where there's a beginning of a game, an end of a game, and you know who your opponent is, you know where you're playing, you can study your opponents. Business is different. Business is 24/7, 365. You don't know who your competition is. There could be somebody that is just about to open up a new store in your market, selling the same exact thing that you do, the same service that you do, and they're going to be your new competition. You don't know that. And that's why business is a sport that, in order to win, you need to understand the language of business, and that's accounting. So think about it this way: if you're playing a sport and you don't, how are you going to know who's winning or losing if the score on the board is in a language that you don't understand? And that's where, again, the language of business is accounting. So the more you can understand that, the more you're going to know who the winners on the field are, who the losers are. You're going to know what needs to be changed. You're going to be able to track yourself. It is essential to your success. So really trying to drive home that point that the accounting is most definitely the language of business. So what I want to just clarify here is that you don't need to become an accountant in order to be successful at business. And I myself was never a math whiz. I always basically found it intimidating. And I know for the first few years in business, I would be meeting with my partner and my other business partner, and we'd be going over the finances, and they understood it better than I did. And in the beginning, I didn't know what was going on, but it took consistency, persistence on my part to start to learn the numbers, to understand the numbers. And soon enough, it did take me a few years, but soon enough, I was able to participate in these numbers. I was able to understand them and actually be able to change the activities that ultimately ended up resulting in the numbers. So definitely some awesome things that can come out of understanding the numbers, and it is truly essential to, again, the success of your business. So digging into what the three most popular financial reports are, and I highly encourage this. You have to get these reports on a monthly basis. What I encourage every business to do is not to receive them any later than the 12th of the preceding month. There is going to require some time for your bookkeeper or accountant to close out the prior month. So you can't, close out the month on the 31st and then get your reporting on the first or second of the month. It will take a little time to reconcile everything, but definitely get it no later than the 12th of the preceding month. This will give you time to analyze the reports, to make any necessary adjustments, and still have time to make your adjustments influence the numbers. What I did years ago was I was more laxed about when I would receive my reporting. And sometimes I'd receive it the 10th of the month, but it was usually more around the 15th, the 20th, maybe even a little bit later. So by the time I got the numbers, went through the numbers, I had no time to affect the numbers. And I was always playing, a solid 4 weeks behind. And it had a negative impact on my company. So get these financial reports no later than the 12th of the month so that you can analyze them and you can put a game plan in place. But going into what these three reports are. So the one that most people are familiar with is the profit and loss statement. Some people refer to it as an income statement. And when I think of a profit and loss statement, I think of it as a series of opinions. So you have, June, July, August, September, and you have all these different months, and there's a series. And the reason why I say opinions is because accountants and bookkeepers, they can get a little crafty with how they code certain expenses, when they code certain expenses, and because that's subjective, they have the power to make your net profits go up or down depending on how they code things and when they code things and if they put things on the books. So that is why I say it's a series, and that's why I also say it's an opinion. So the next important report that you're going to want to look at is going to be the balance sheet. Now, the balance sheet is something that not as many people understand how to read it, but a balance sheet is unlike a profit and loss statement, a P&L, unlike that, which is a series of opinions. The balance sheet is more of a snapshot in time. So if you want to look and see exactly how your business was on December 31st of last year, you can pull that from your QuickBooks, if that's the platform you're using, and it'll show you exactly on December 31st of the previous year what your financial position was. So it's a really important report to go into because it really does show the overall sustainability of your business. It lets you know your liabilities and your assets and the equity, and it's essential to really determining where your business is going. So that is another one of the three reports that you should be getting on a monthly basis. And then the last one, which is a cash flow statement. And I like this one the most because I would say this is more of a series of facts where, unlike a profit and loss statement, which is an opinion, when you look at the cash flow statement, what it says in your bank account on that day is a fact. There is not, it's not gonna, you're not gonna log on and look at your bank account and it's gonna say, oh, well, I think you have $50,000 in there. No, it's gonna tell you the exact amount of money you have. So it is crucial. This is probably the most underrated report, and happens to be one of the most important, if not the most important report that you should be looking at on a definitely a monthly basis, if not even at a higher frequency. So I think most of us have heard that old saying that cash is king, and that truly is, because I'm not sure if you guys have ever had a month where the P&L, the profit and loss statement, shows that you made a healthy profit, but then you look in your bank account and there's no money in there. So you're not able to pay yourself. You're not able to reinvest that money back into the business. So that is a crucial thing to understand, because cash is a fact and you have to pay the most amount of attention on the cash flow of your business. So those are the three reports that you need to become intimately in tune with in order to really build on your own financial literacy. So, like I mentioned earlier on, there's definitely hundreds of different accounting terms out there, and I don't want to confuse or overwhelm people with a bunch of terms that really don't apply that much in retail. So I was able to really extract the ones that I know I apply the most, and I know other retail business owners do as well. So some of the main things out there, I'm not going to go and read every one of these definitions, but I do want to highlight the key ones. So accounts receivable in retail, everybody typically exchanges their product or service and gets paid right then. So most retail businesses don't necessarily have a long accounts receivable, or a large accounts receivable account. Accounts payable, on the other hand, that is something that retail definitely deals with. And what falls into that are going to be your inventory that you're purchasing goes into accounts payable. So you want to make sure that your accounts payable, the thing that's going to really help with cash flow, is you want your accounts payable as far as possible pushed out. What that does is you can sell your product, you receive the cash goes in your bank, but you don't have to pay your vendor for, say, 90, 120, or maybe even longer. What that means to you is the cash sits in your bank account. It allows you to reinvest it and grow your business. So it's really important. Accounts payable is one of the most important things for a retail business to pay attention to. There's two different types of two different methods for accounting. There's the accrual basis and the cash basis. So without getting really deep into either one of these, the easiest way to think about it this way is going back to the previous slide when I talked about modeling the success of others and how I looked at Wall Street. Well, 100% of the publicly traded companies on Wall Street use the accrual basis accounting method. So I highly suggest to stick with the accrual basis. When you look at the cash basis, which that'll be on a further slide, it's a harder way to account, and it's better for very small businesses. Solopreneurs could use this, but it's not something that, if you do want to have a business and you do want to grow it and you have employees, I don't encourage the cash basis. I highly recommend just sticking with the accrual basis of accounting. Assets, it's going to have the cash that you have in the bank. It's going to be inventory that you're holding, furniture, fixtures, if you own any real estate. So that's going to be, what falls under assets. Cash basis, I just talked about that. Not something that I would necessarily recommend, because it is more difficult to manage the business, and everything has to deal with the way that sales are being recorded and when they're being recorded. Expenses, this is a big one for retail because retail typically operates on a finer margin. And in order to maximize the net profits of the business, you have to keep your expenses down. So always looking at the expenses is going to be really essential to your success. Income, I think everybody probably knows what that is. Let's go down a little bit further. So liabilities. So liabilities is that's going to come from your balance sheet, one of the three reports that I mentioned earlier. And what is a liability for a business? You're going to have your, like I mentioned before, your accounts payable. So that's money that's leaving the business. Credit cards, if you have any loans, those are all things that are going to be considered a liability for your business. So you want to keep those down. You want to have lower liabilities. Margin, I briefly mentioned this as well. In retail, you want to maximize, you want to be selling products or services that have the highest margin. The highest margin is also going to mean that you have the highest gross profit. So focusing on the items that deliver you the most profit, the most gross margin, is crucial to your success. So a lot of businesses out there don't pay a lot of attention to this, and unbeknownst to them, they're getting all of their energy and efforts and marketing behind products that they're really not making a lot of money on, and ultimately ends up creating a negative cash flow for them. So paying attention to the margin is going to be, again, another one of those items that's essential to your success. So operating cash flow. This is so much of what Retailer's Tool Belt is about, is educating retail business owners on what operating cash flow is, how to influence it, and basically make their business better. So one of the most important things for you to focus on, and there's three different types of cash flow out there, but we want to always be focusing on operating cash flow. And when you can increase and improve the operating cash flow of your business, it's going to allow you money that's going to become liquid. It's going to become available to you to reinvest in the business, or you were able to take that money out of the business and increase your own personal earnings. So all of that is doable by increasing your operating cash flow. So that is definitely one of those terms that I want you to be very in tune with, very aware of. Continuing on, profit, that's something that most people will already understand. A quarter, which is the 3-month interval of time in a year. And that is something, again, that I looked when I was studying how Wall Street views their companies. They would always come up with an end of quarter earnings report. And Wall Street always looks at it as a 3-month block of time. So I too started to do that in my business. And I found that it was easy to break down, to chunk down a 12-month annual goal into quarters. It allowed my team to be able to get their head around it and to look at this goal, not something very big, but now look at it at a smaller basis. I was able to influence my numbers better by talking about the year in quarters, not just in an annual sense. So that is something that I know personally I have found great success with. Receivables, like I mentioned earlier on, most retail businesses don't have accounts receivable because the money is exchanged when the product or service is. But if you do own a business where you do have receivables, the key is to keep the receivable days as short as possible, because unlike is an exact opposite of accounts payable. Accounts payable is money going out of your account. So you want to push those days out as far as you can to keep the money in your account. Accounts receivable is when you want to bring the money back into your account as fast as possible. So you want to keep those days down. So if your business does have receivables, you want to keep the days down. Return on assets. Now, this is one of those ratios that I looked at that really helped my business, because it showed me a different way of looking at the numbers. And I was able to determine that the better that I become at increasing the return on my assets, I am able to basically, I'm utilizing my payroll dollars more so. So again, there's a few measures out there, but this is an interesting one because it shows me how good I am at basically converting my assets into profit. So that's something, it might take a little bit of time to really understand that particular KPI, key performance indicator, but I know over the years that has been essential to me really growing my company sustainably. So the the next one is profit per employee, and this is a great one because in a retail business, you basically, one of your largest expenses is going to be payroll. Rent is another one, but payroll is huge. So by measuring the profit per employee, it lets you know exactly how productive your employees are at creating profit. So the key here is you want to be able to increase your profit and do it without increasing the number of employees you have. So an easy way to summarize that is you want to be able to produce more with less. And right now, less is the number of employees. But if we look at the next ratio, which is profit return on payroll ratio, this is looking more at dollars now. So that particular ratio lets you know how productive your total payroll is. And what you want to do is, let's just say you spend $10,000 a month on payroll and it generates $100,000 in profit. What you want to basically do is spend $9,000 on payroll and again keep the same amount of profit there. So you want to be able to produce more with less. The next thing you'll probably hear a lot is EBITDA. And EBITDA is basically earnings before interest, taxes, depreciation, and amortization. Now, the reason why that one is very important is at the end of the year, before your accountant applies any depreciation, you want to look at what the true profit of your company was, because that's how you're really going to gauge how you're doing. So these next section are more secondary accounting terms, and there's not as many things that I want to really pinpoint on this one. I know one of the things, I have short-term debt and long-term debt, and this is something that a lot of businesses don't separate on their balance sheet, and they just put it all under debt, but it doesn't give a great measure as far as how much risk you may be carrying in the short term. So a lot of times if a business is going to receive financing cash flow, and what I mean by that is they take a loan, and that loan could be a construction loan, that loan could be just an operating loan, and that loan could be a payback over 5 years. Well, you want to separate that loan from 5 years. You want to put the first 12 months, what's due immediately, and we break that down 1 year, that goes under short-term debt, and the remainder of that note goes under long-term debt. It allows you to see what the severity is in the short term, what over the next year that business is going to be responsible for, liable for. So separating those two can mean a lot for some business, especially if you are growing a lot, you're taking on a lot of loans. There's nothing wrong with taking on debt, but understanding the short-term and long-term aspect of it and when it's due is really, it'll prevent you from getting caught in a jam. So kind of recapping what we have here today. So we learned, that in order to run a successful retail business, you really have to understand accounting. And when we move on and we look at this, the behaviors, we model the behaviors of other successful people. I look at Wall Street. What metrics, do they look at? The frequency. How are they measuring things? How are they viewing the CEO, the CFO? What traits are they looking for? So these are all the things that you need to become very aware of. And you can even expand beyond Wall Street. You look at everybody's familiar with Apple. They're there for innovation and design. Their products are very intuitive. So how can you apply that in your own business? How can you innovate in your industry? How can you look at the overall store design, the process of the sales and the flow of traffic? Can you apply intuitiveness to that so that you can ultimately make your experience better for your customers and your teammates? Look at a company like Amazon. You have Jeff Bezos. He is somebody that is a disruptor. He's always challenging the status quo. So how can you learn from somebody like Jeff Bezos to be that disruptor in your own industry, to challenge your own status quo? Warren Buffett, I've mentioned him multiple times so far, but I highly encourage reading a number of his books because it'll show you how he values companies. And when you can see what he looks for in companies, you can apply that same perspective and work on those areas of your business. So you can learn from somebody like Warren Buffett, who is an investor, Sam Walton, the founder of Walmart, greatest retailer of our time. I highly encourage reading some of his books because it'll break down exactly how he grew Walmart into the company that it is today. It'll show you that he really paid attention to every detail. And if you can learn and model some of your behavior after Sam Walton, you're going to find that your business it's going to grow at a tremendous pace. And I'm not saying that everybody has to have 15,000 locations. That may not be your goal, and that's perfectly fine. But it's still about paying attention to the details. Even if your goal and dream is just to have a single store, there's absolutely nothing wrong with that. But make it the best single store in your industry, and even beyond that industry, because that staying in that industry could be a little short-sighted. You want customers who come into your store to have the best experience, whether they're buying whatever widget you're selling or they're going to a big box store. Richard Branson, he is another person that he's always paid so much attention to the experience that he creates for his customers, and that's what made him a multi-billionaire, is because of the experiences that he creates. So how can you learn from Richard Branson? What can you take from him and apply it in your business? So these are some of the things that we learned, and I'm trying to get you to think differently and to see things differently and to learn from different people. Don't just learn from the people in your industry. That's very short-sighted and limited. You want to expand your scope of mentors, expand your scope of where you're getting information from. You also learn key metrics, for how to measure your business. So the obvious one that most people know is gross revenue. You obviously want to be growing your gross revenue year over year, month over month. Even if you literally grow it $1 more than you did the previous year, that's growth. And you always want to be growing. Wall Street is always looking for growth. They don't want to see stagnant numbers. If you are not growing, you are dying. So you want to make sure you're growing your top line, which is your gross revenue. Net profit. You want your net profit to constantly be growing. So another key metric to look at, I mentioned this one that I learned the hard way, which was same store sales growth. So if you do have a business with multiple locations, that is a crucial metric to look at. If you have a single store, not as important, but you're going to be comparing your store to how it was last month, last year, and so forth and so on. I mentioned the expenses in retail. Managing your expenses is very difficult. So it's something that you want to look for the trend. So if you don't want to just look at the current month or the previous months of expense that you're in, you want to go back 6 to 12 months and really see, are my expenses going up or are they going down? And cash flow. So cash flow, I said that is the basis of what Retailer's Tool Belt is. Is there to help people understand the importance of cash flow, the different types of cash flow. And, there's Lou Mobley, he said this best, and he says, you can operate a long time without profit, but you cannot survive a week without cash. And that is the epitome. That just summarizes everything that we're going into. That it just drives home the point just how important your cash flow is. We also learned return on assets. So definitely touched on a few things here today so far. But just to round this out and just to re-summarize, all of these things go into three financial reports that you need to receive on a monthly basis. And again, they are the P&L, the profit and loss statement or income statement. And I started to allude to this, but you want to pay attention to the trend. And you don't want to just look at 1 month. You don't know if by looking at a short time frame, a 1 month or 2 month window, you really don't know if you're heading in the right direction or the wrong direction. And that's why I encourage you to go back 6 to 12 months to see where the trend is going. Are you going in a good direction or a bad direction? Same thing is applicable to the balance sheet. Pay attention to the trend and then become very in tune with your statement of cash flow, because at the end of the day, cash is a fact and the net income is an opinion. So we definitely touched on numerous things. This is the foundational piece for all the different lessons that we're going to have, and this really will set you up for the next lesson. So thank you for your time, and be sure to watch the next lesson.